If you're losing money trading Forex, you are not alone. Over 90% of traders end up losing money trading Forex, and that's not because of their bad strategies. In this video, I'm going to go much deeper than that and show you exactly the reasons why most traders end up losing and everything else. So make sure you watch to the very end as I show you everything that I've learned in my past 5 years of trading. All right, so let's get into it right now. So you're going to realize that what's very common among Forex traders is that we get so much inspiration from the outside world, from the influencers and everyone else, right? And guess what? Before you realize it, you are already opening up an account, and then you've deposited your $50, your $100 without having any knowledge about the market. And guess what? You get surprised when you actually end up blowing that account. Why? Because you literally lack knowledge. You have no knowledge about trading whatsoever. You just seen someone make money claiming they've turned a $50 into $1,000. Hence, you are also tempted to actually do it without actually having a proper understanding of the market. And that's the fastest way to lose your money. All right. So you don't have a strategy, you don't have an understanding of the market, and then you just jump into it without actually having a proven edge in the market. So that's suicidal, guys. That's suicidal. So what are you supposed to do? If you're new to trading, gather as much knowledge as you can about the market. All right, gather as much knowledge as you can in terms of the strategy that you're actually going to use. You have to backtest that strategy. You have to forward test it. You have to live test it using maybe a demo or a small account so that you can actually prove that that strategy actually works. It's only when you've done those things that you are allowed to be able to go in the market and actually trade. All right, and that doesn't take a month, that can take 3 months, 6 months. So it's really really important that you actually find a strategy that has been proven to be profitable over time. You hear me emphasize the phrase over time, because it's not about just back testing for a week and proving that, oh, this actually works, or just having one successful trade and you think that that strategy actually works, because the market works in terms of probability and randomness, right? One trade, literally anyone can just place a trade right now and actually find themselves in a winning trade. But does that mean that strategy is profitable? No. It's because when you flip a coin, anything can happen at any particular time. So you can take a guess and you can actually make money. But the game here is not making money on a single trade. The game here is making money consistently over time, right? If you don't have that type of consistency, guess what? You won't last so much in the market, because you'll be frustrated, you'll be angry, because you would feel like you've been scammed, because well, you didn't do your research, right? So it's really really important to have a strategy that you've proven to work over time by back testing it, by forward testing that strategy and live testing that strategy, proving that that strategy actually works. It's only when you've done those things that now you can now jump into the market to actually trade. And I would recommend 1 to 2 months of back testing, like really vigorous back testing, where you are actually doing it on a daily basis and really proving to yourself that the strategy actually works. And how are you going to know that the strategy actually works? You're going to have wins, of course, you're going to have losses, but your wins should be bigger than your losses. All right. So in terms of two things, there are two things that can happen right there. You can have a higher win rate and a lower risk reward ratio, or you can have a higher risk reward ratio and a lower win rate. So it's all about what you're comfortable with. So find that sweet spot and stick with it. All right. Like I always say, I've seen people who've been trading the market over 5 years, but they still come to us to actually want to learn the strategy. Why? It's because they've not found a strategy and they keep jumping from one strategy to the other. Guys, every strategy works. However, it won't work at the same time. All right. So this particular time, this strategy work. This particular time, this strategy won't work. And what happens is that most people, when they just have they have maybe 2, 3, 4 losses in a row, they start thinking the strategy doesn't work. And guess what? They go on in a vicious cycle of actually looking for profitable strategy that they heard someone say they have a 90% or 100% win rate. Right? Even the best traders don't have a more than a 50% win rate. Like most of the best traders are going to see have like 50, 45% win rate. As one of the best traders that Mark Douglas talks about had a 5% win rate, but was able to make over millions like in the 90s. Why? It's all about how much money you make when you win, not about winning consistently or winning every trade. That's very unrealistic. So find the age that you're comfortable with. Find the age that you're comfortable with in terms of risk reward ratio, in terms of win rate, and it must fit your personality, guys. It's really really important. So find what you're comfortable with, and once you found that, stick with it, guys. Like, it's going to be like very easy like that, right? You're going to have losses. You're supposed to expect that. Wins are going to come. So it's all about getting it all, right? Not just looking for that holy grail that someone told you that there's a holy grail that doesn't lose. You end up looking for strategies even after 10 years of trading, because there's no such a thing as the holy grail in the market. So the holy grail that you have is your mindset, all right? So make sure you know your strategy to the T and just keep on executing. And once you've done that, guess what? You'll be comfortable taking wins and losses and everything. And if you're looking for a backtesting software, there's a link down in the description. Forex Tester 5. Make sure you check it out so that you're able to actually backtest and everything. All right. So the number two reasons why most people end up losing consistently in the market is because of lack of proper risk management, right? You've heard this several times. What is risk management? So, risk management is basically making sure that you know exactly how much you are losing on a trade by trade basis. It's that simple, guys. It's that simple. If you can just know exactly how much you're losing in advance before you even take a trade, know exactly, okay, in this particular trade, I'm risking $100. And the most important part of it is that I'm comfortable and okay losing $100. Guess what? That will ease up your mind, and you won't be frustrated. You won't be checking your phone every 2 minutes or every 1 minute or every move that the market makes. Why? Because you've internalize the risk and you've accepted the risk of that $100 going, right? But the moment you don't actually accept the risk, guess what's going to happen? Every time the market moves in a direction or against you, you'll be anxious every time. Why? Because you've not accepted the risk of that particular trade. Right? Why can you not accept the risk of a trade in a market where the outcome of any trade is random? That is very obvious, guys. You have to predefine your risks every time. Understand exactly how much you're standing to lose and fully accept it. Tell yourself, okay, right now I'm taking a USD buy and I'm risking $200. And am I okay losing a $200? Yes, I'm okay. Why? Because it's supposed to be between 1 to 3% of your account. Actually, for me, 0.5 to like 1% maximum per trade. That's what I recommend, right? So 0.5 to like maximum 1% per trade. And you should be okay risking that much because it's 1% maximum. But what happens? Most people end up risking half their account, 20%. That's crazy, guys. Guess how many times you're going to actually lose for you to lose your whole account. Sometimes you just take 1, 2 losses, you're done. Why? Because you're over risking on a trade by trade basis. You're lying to yourself thinking that this trade looks so solid, man. This setup looks solid. Guess what? I think it's going to actually go in my direction. And then you'll be pleasantly surprised that the market actually goes for your stop loss, which is normal. But you risked your whole account. That's the reason why you end up blowing your account. So stop blowing your accounts. First thing, make sure you go to a position size calculator, do your calculations, find out exactly how much money you are risking on that particular trade, what percentage of the account it is, and then just keep on executing, executing, executing. And once you do that consistently, you're going to realize that you are going to get comfortable with it because over time you've been doing it. All right. So it's really, really important because without risk management, no matter how good of a strategy that you may have, you will not make it long term. You will not make it long term. I can guarantee you that with 100% certainty. have a proper risk management, and have a stop loss in place. All right. And once you've done that, find a way of paying yourself as the market makes money available to you. So it can be through trading of the stop loss, it can be through taking partials. So whatever you're comfortable with, whether it's trading a stop loss or taking partials, make sure you do that consistently, because that's what's going to keep you consistently profitable in the market. If you don't do that, guess what? The outcome is very obvious. You're going to lose at the end of the day. So find a way of paying yourself, make sure that you're calculating your risk every time, and trust me, that's going to actually help you become a consistently profitable trader, and it's going to differentiate you from the 90% or 95% of people that end up losing money consistently in the market. Right? So that is extremely, extremely important. And the third reason, and the most important reason after all these things we've talked about, is your mindset. So your mindset is very, very important when it comes to the market. So if you come with the same mindset that you come with in the market when you're new from the corporate world, you've been working so hard in these areas of your life, and you've been achieving, and you think that if you bring that same mindset to the market, you're going to make money, you'll be so surprised. Because in trading, it requires you to be a completely different person. It requires you to think completely different from the corporate world, right? Because in the outside world, you find that when you do certain things, when you work extra hard, when you do the ABC, there's a very high chance of you achieving ABC, right? That's very normal. But in trading, I can tell you, sometimes you can wake up, let's say in the middle of the night, to actually analyze the market. You do everything, you prepare everything. But remember, the outcome of every trade is random. And that is really, really hard to comprehend. Why? Because you've done all the work. However, the outcome is random. And you have to comprehend that. You have to understand that and actually accept it. The moment you have conflict with that, you won't be profitable. Because guess what's going to happen after you take a loss? You are going to revenge trade, you're going to have FOMO, you're going to do all crazy shit just to get back your money. And guess what? It's going to cost you your account. You're going to blow up at the end of the day. So, trading psychology becomes very, very important when you've mastered your strategy and risk management. So it's really, those two things are really, really important. But when you've done that, then your psychology becomes very, very important. So it's all about having a probabilistic mindset where you are going to think in terms of probability and a larger sample size, right? Because you understand that at the end of the day, on a trade by trade basis, anything can happen. And when you do understand that, it's going to prevent you from over risking and do all those crazy things, right? So find a way of actually becoming self aware about your emotions. Because guess what? If I'm taking this trade right now and I'm thinking, on this particular trade, I'm risking this much and I'm potentially going to make like $2,000. And in my mind, I'm thinking, okay, if I make this $2,000, I'm going to pay my rent, or I'm going to buy that phone. I'm going to do this or that. Guess what? What's going to happen when you lose that money? You won't just lose the amount of money that you are risking. You've also lost those unfulfilled expectation that you had on that particular trade, and that's going to trigger emotional pain and revenge trading. So it's really, really important that you have that probabilistic mindset where you are thinking in terms of larger sample size and not on a trade by trade basis. Because on a trade by trade basis, you and I have no control over what's going to happen over the market, no matter how much you might try to do, right? So once you develop a probabilistic mindset where you think in larger sample size of trades, not on a trade by trade basis, guess what? You won't expect any trade to actually give you anything. If anything, you're going to expect that trade to actually lose. Why? Because you understand that the market works in terms of probability. And that is very, very important for you to become a consistently profitable trader that I know you want to become. So have a larger sample size kind of mindset, think in terms of probability, then find a way of actually taking care of your mindset. So it can be through meditation or or practicing of mindfulness. Other can just be exercising, it can be doing martial arts, it can be going to the gym. So whatever actually helps you become calm, right? Remain calm under pressure. Practice that on a consistent basis. That's going to keep you afloat at the end of the day. Otherwise, it's really, really hard out there, guys. So for the books that I'd actually recommend for your psychology, I recommend The Disciplined Trader by Mark Douglas. This is a very, very important book that I actually recommend, and Trading in the Zone. So read those books. Those books are going to help you become aware of your psychology and everything, because revenge trading, FOMO, these things are real. These things are real. So you have to actually learn how to control the amygdala hijack, right? The amygdala hijack happens to us every now and then, right? So for example, let me give you an example, right? If something bad or someone insults you, the most immediate thing that's going to come is you getting angry. And by you getting angry, guess what's going to happen? You're going to do something stupid, right? And if you do that later on, what's going to happen? You're going to actually regret it. Why? Because the amygdala, which is the part of the brain that controls your emotions, operates at a faster rate than your prefrontal cortex, which is responsible for your higher functioning, right? So because of that, you are most likely going to actually do more damn shit by responding quickly. So no wonder you hear people say, whenever something bad has happened, take a deep breath. Whenever you've taken a loss, take a deep breath and then walk away from the chart, so that you give the time for your prefrontal cortex to actually kick in. Because if you just stick to where you are right there after taking a loss, guess what's going to happen? You are going to revenge trade, because the mind operates like that. The amygdala hijack, once it attacks you, it causes three things. It causes you to fight, flight, or freeze, right? The market is going in a direction, then all of a sudden you've seen the market now going against you with big momentum candles. Instead of getting away or just stop getting stopped out, what's going to happen is that most of the time you either fight by trying to go in again with a larger sample size or larger position size, which is fighting, or others they will just completely remove the stop loss and then just let the market take all their money away, right? Which is freezing. Or they're just going to just, okay, guess what? Let me just run and just forget about this. So the moment you become aware of these things, you're going to realize that you are going to be much in a better place, where you are able to actually anticipate these things happening, and then you're going to take your losses gracefully, and you're going to take your wins gracefully. Remember, there's no need to become upset when you take a loss, and there's no reason for you to become happy when you take a win. Why? Because both outcomes are random and are outside your circle of control. And if you don't control outcome, why would you be happy if you took a win? Why would you be sad if you took a loss? Because you never caused either of the outcomes. So it's really, really important that you have that frame of mindset, and that's going to save you long term as a trader. All right. So it's my hope that you've actually found value in this video. And if you have and you'd like to learn more about this and what I've talked about, we have our M&F Mastery course in the description, which goes into our strategy, risk management, and trading psychology. And I will teach you everything I know about trading and make sure that you are a consistently profitable trader in the market. All right. I wish you all the very best. Until next time, make sure to subscribe, like the video, and comment in the comment section. Goodbye.